Good evening. How you guys doing? Glad to have you here. Now listen, I'm going to read from this article, and it's from Zero Hedge, and it's called Governments and Big Banks Are Stockpiling Gold. They know what is going to happen. And I believe this is very true. It says, the writing on the wall of major financial institutions around the world are warning about the economic disaster to come. Unabated money printing, tariff and trade wars, rising interest rates, and retail slowdowns point to one result, and that's going to be brutal. I believe this is very true. I'm going to tell you what. I was checking the LIBOR, the 3-month LIBOR tonight. It seems to have leveled off a little bit for now. That's a good thing, but I think it's going to start to go up again. It's going to start to rise again. It's been on the rise, awful steep curve. It's been rising lately, and do you know how much debt in the world, how much leverage is in the system right now? It's unbelievable, the amount of leverage in the system. And everything out there, all your assets, everything, all your bank assets, they're all tied into the derivatives market. In the derivatives markets, there's so much counterparty risk in the system. I'm going to tell you, if you don't own it in your physical, in your hand, if you don't have it in your possession, you don't really own it in this system, because this system is so highly leveraged that when it starts to break apart, you're going to find that these guys, these big shots out there, are going to go, they're going to grab everything that they can grab. They're going to put in their margin calls on everything, and everything's going to fold in around it. So I'm going to read a little bit more of this article. It says, big banks and governments know what is coming, and they are preparing for this eventuality by stockpiling huge amounts of real money ahead of the crisis. Now, I know what they're talking about here when they say real money. Gold and silver. According to Keith Neumeyer, the CEO of the world's top primary silver producer, First Majestic Silver, and chairman of the First Mining Gold, the cartels he's previously reported to the CFTC have continued to manipulate the prices of precious metals while loading up their own vaults with gold and silver. The answer to why they're doing it is simple, as Neumeyer highlighted in a recent interview with SGT Report. The answer is simple to me why they're doing it, is they want to make profit. These big bankers, like J.P. Morgan, they only think of profit, and they're not like all of us out here. I read an article one time that says why poor people are poor and why rich people are rich. And it was a very interesting article. And it talked about the really poorer people, like our class of people. You know, that it says what they do is when they get paid every month, they go out and they buy things. Take them home. They'll go to like dollar store and buy a whole bunch of stuff and take the stuff home, you know. And they buy things that they need. They really need these things, but it all adds up, you know. And then there's the people that are a little bit higher class of people, or more middle class, or they got a little bit more money coming in. They're like doctors, lawyers, stuff. It said in the article they do something very similar, except they buy more expensive toys. They buy the jet ski, you know, or the speedboat, or the Hummer, right? And instead of buying the candlesticks at dollar store, they buy a Hummer for themselves, the doctors and lawyers. But then they have to service all these vehicles or whatnot, and they cost some money. They have to spend money to go out and get the Hummer new tires on the Hummer and so on. And so they always stay they never really get much ahead either, more than the lower level people. But the rich people, they work things entirely differently, said. What the rich people actually do is they only buy things if it's going to make them money. Like, let's put it this way. The middle class people might go out and say buy a bar, Say they see a bar that's a pretty good little bar, and they go there every night to a tavern someplace, right? The middle class guy, the guy that's a lawyer. So he says to his wife, "Oh, this would be a really good investment." But he's thinking in his mind, "I'll stop there every night, and I have my beer there every night. I'll own the place." And he's thinking to himself, "Hey, this would be pretty neat to own a tavern." So he goes out and he checks with the real estate agent, and he talks about buying it, and he makes them an offer or whatever, and he buys the place. Well, the rich guy don't think that way. The rich guy doesn't think, "Oh, this would be really cool to own a tavern for myself or whatever." The rich guy, he said he don't think it's cool at all. He just thinks, what kind of profit's it going to make me? So he goes in and he checks the books and everything, and checks the records on the place and sees if it's making a profit, and sees if he can actually tie it down to making him a profit, making him money. The rich people won't buy anything. They don't buy anything unless they know that it's going to make them a tidy profit. They're always thinking profit, how much profit, and what kind of a business is this? And they're very careful. They'll never do things that appeal to the middle class people. Sometimes the middle class people, a guy will come in and he'll be a big talker, and he'll say, "Hey, you know what? We're going to go in business, and we're going to go in some business." He'll mention to the guy. He might say, "Well, we're going to go into the fruit tree business. We're going to start raising fruit trees and stuff. And well, all we need is an initial investment of $20,000, and we'll go in business, and this will make all kinds of money because it's really good business and stuff." And he'll talk the guy into putting $20,000 down to go into the business. The way a rich person thinks is they say to themselves, "Hey, you know what? If you need $20,000 to go into business, that means that and you haven't made $1 yet." This is the way the rich person thinks. Then what good is that business? The business is supposed to make you money. You're not supposed to have to invest money to go into a business. That's the way a rich person thinks. Where a middle class person thinks, "Okay, I'll invest this much money in the business, and then the business will make me money." Now, this is the same guy that goes out and spends his money on jet ski. Where they get their money, these middle class people, is they have a good job. They have a job that's in the either lawyer or doctor or something that's pulling them in some pretty good bucks, you know? And they get used to spending these pretty good bucks, and they're always poor. But the rich people, they are constantly thinking about investments that are really going to make them money and bring in return on their investment, right? And this is what they do. They're always parlaying their money. They're always taking their money that they have, and they're always putting it out there to make more money. The old saying, "It takes money to make money." This is what rich people do. They're constantly parlaying their money in to make more money. And so, this is the way it's been going for a long time during this credit expansion. But now, you know what? The rich people are turning around, and they're getting this gold and silver. They can see this coming. So I'm getting sidetracked a little bit off of my article here. It says, according to Keith Neumeyer, the CEO of world's top primary silver producer, First Majestic. Okay, I've read that. Sorry. It says, the verdict is still out on whether we're going into a disinflationary, that's deflationary, or inflationary environment. Gold can do well in both environments. In fact, the fact of the matter is governments are printing extraordinary amounts of fiat currencies, and that is not going to change. The stage is set for higher gold prices due to the amount of money being printed. I am of the belief a major reset is coming where the governments of the world will need to rid them of the debt by fixing everything to the price of gold. That is why governments like China, Russia, and other governments around the world are accumulating gold, because they know what is going to happen over the next several years. If it's true, says here, that J.P. Morgan has acquired the largest position of physical silver in the world, that is pretty amazing. Or he says, that is pretty amazing. Any bank wanting a long position like that is doing it for a reason. I happen to totally agree, and I've talked about this in other stories that I've done on here, and I've said that I think that J.P. Morgan doesn't want anything less than 10 times his money back on this silver. And like us, he's bought in around the same price that a lot of us have bought in at. because he's been accumulating for a while now. He started accumulating, I think, when the price was about maybe 27 or something. And he's rode that puppy all the way down to the bottom of like, what was it, 1380, and he's rode it all the way back up to where it is now. And I guess he's still hanging on. He's got this big, huge silver position. I guess it's like 100 million ounces or something. Massive silver position he's got. He's wanting to make 10 times his money. And so if he cost average, just like we have to cost average, he'd have to cost average. He's probably in somewhere around $20 or $22 or something like that per ounce. He's looking at he's thinking to himself 10 times. So what's that mean that silver's going to go up to? $200 an ounce? I'm going to tell you what I've thought, and I've thought this often. I've thought the time to sell is watch J.P. Morgan. When he starts to sell his position, that's the time for you to sell your position in silver. When he sells his position. Of course, you won't be able to hit it because he'll drop the price some. So say it's up to 210, he sells out. He'll drop it back down to maybe 200 or 190. But that's the time for you to sell too. When you watch him when he sells his position. He's going long right now, and you just got to watch what's going on. You got to keep your eyes open and know what to look for. Just like I said, when the bonds hit 3.25%, the U.S. 10-year, that's a mark. You got to know what to look for. I know what to look for. I'm watching for that. That's when we're going to get our stock market crash. That means we're locked and loaded and we're ready for our stock market crash. Now you got to wait for it. And like I thought that it would happen sooner. It's taken a bit longer, and the reason why is because the Fed is doing some hanky-panky. I don't know exactly what they're doing, but they're doing hanky-panky, and this is why it's taken a little bit longer than I thought. But it'll get there. It'll get there. You got to wait for it, you know. Anyway, let's move on here. It says Neumeyer explains that not only are there monetary factors at play, but also supply issues, as production, especially in silver, has dropped markedly over the last several years. All of this bodes well for rising prices of metals going forwards, with reasonable estimates for future growth far exceeding all-time highs we've seen in recent years. Metals are an extremely tight trading range. This base the metals are building right now, in 3 years in the making. And when the metals finally take off this year, it's going to be an astounding thing to watch. We lived through it in 2010 and 2011. Good mining stocks will far exceed the movement of the metal itself. A stock like First Mining would absolutely explode in an environment like that. It's hard to predict the exact prices that stocks would do, but it would be quite different than it is today. He says, I think $2,000 to $3,000 gold are reasonable numbers that we will experience in the not-too-distant future. Well, you know what? If gold goes to $3,000 like he says right here, silver's not going to stay at the 80-to-1 ratio. Silver's going to move to a 50-to-1 ratio. So if we're looking at a $3,000 gold, we're looking at a massive move up in the price of silver. You know? What would that be, actually? What would that be? If it moved to a 50-to-1 ratio, that would be on $1,000. What's my math? Would that be $20 for silver for every 1,000, and then 3,000, 3 times that would be what? $60 silver. Am I figuring that right in my head? Would that be $60 silver? I think. If gold moved to $3,000 and silver moved to a 50-to-1 ratio, would that be $60 silver? I can't do that math in my head that quick. Sorry, I can't. I used to be able to when I was like in my 20s, but I can't anymore. Financial analysts and large institutions have generally avoided gold and silver for nearly a decade, but the tide appears to be changing. As prices remain suppressed, governments are acquiring, big banks are acquiring, and even Morgan Stanley recently noted that gold can be used as a very good proxy of the true value of the dollar over long periods of time. We know economic collapse on a massive scale is approaching. To get an idea where one should be diversified in their assets in the event of a worst-case scenario plays out, one need only ask the following question. What is money when the system collapses? 5,000 years of history for the single most reliable monetary asset class of last resort has already given us the answer. Gold and silver's money. And it's got no counterparty risk. This is the big thing. This is the really big thing here, is the counterparty risk on everything else. Your stocks, your bonds, everything else is full of counterparty risk, and these big shots are going to come after it all, and they're going to pull it out from under you, just the way you have a rug pulled out from under you. You're going to end up with nothing. Terrible bad if you went out and you bought physical, and you've got it stored with a vaulting company. Because what's going to happen is a Brinks truck's going to pull up to the vaulting company while you're asleep in bed, and they're going to load it up with your gold, and your silver, and they're going to drive on down the road, and good luck getting it back, because some bank is going to come in and put a first lien against the vaulting company, because they own the vaulting company. They're going to come in, and they're going to take all the gold and silver to satisfy the lien against the vaulting company. And right now, you look at the vaulting company and you say to yourself, oh, yeah, I got my gold there and they got it stored there and I can go see it every weekend or whatever, yeah. But a rug could be pulled out from under you so quick. This counterparty risk, same thing in the stock market. What actually do you have that's tangible that you can actually hold in your hand? Because when this whole system melts down, you're going to find out that gold and silver are money. And I'm going to tell you, it might get so bad that the internet might have days when it shuts off, weeks to a time when the internet shuts off, when this system collapse happens. What good is your cryptocurrencies when that happens? Think gold and silver. Get your gold and silver first, think cryptocurrency later. Now, I'm not saying I'm saying that cryptocurrency has a very bright future for it, but that's further ahead. Right now, it's speculators who have driven the price up on cryptocurrency all across the world. And the same thing with gold and silver, though, right now, it's been suppressed for all this long time. It's like a coiled spring ready to bounce in price. Price is ready to go up massively in gold and silver. Now, just remember, guys, though, this is not financial advice and not intended to be such. So thank you guys for listening. Like and subscribe, and we'll catch you in the next show. Bye.